Okay, let's get to PK Basu, MD and head of Asia Research and Economics at Maybank, Kim Eng. He joins us here on the desk at the SGX. Still with us is Stephen Sheng from SHK Private up in our Hong Kong studios. PK, good to see you. Welcome back. You are just back from India, right?
I'm actually back from the U.S. I was in the U.S. for the past 2 weeks.
Ah, okay. All right. All right. Geithner is in India as we speak. These talks, what are they going to yield, do you think, if anything?
Well, I think it'll advance the U.S.-India relationship. It's political season in the U.S., and so I don't think the Indians will get very much. I think the Indians primarily want an easing of visa restrictions on Indian technology workers in the U.S. I don't think there's going to be much progress on that. India has made some significant economic reforms over the past month, which I think will be quite positive, particularly for U.S. business. And I think this meeting really just reinforces the message that the Indian economy is opening up. There are lots of additional opportunities for U.S. companies.
Well, let me ask you something. This story we were just talking about, a government panel saying there should not be retrospective taxes on overseas deals. The timing with this Geithner-Bernanke visit to India, I mean, this has been the big question for companies thinking about investing in this country. Well, it's a big deal, this story, yeah?
I think this particular story is something that has been addressed by a panel over the past 2 or 3 months, and it just happens to coincide. I don't think it was timed to come out today. I think there are weightier issues to discuss, in particular the fact that India is opening up on a variety of sectors: aviation, broadcasting, multi-brand and single-brand retail, pensions, insurance, etc. All of that being opened up for foreign direct investment. I think those opportunities really are what will be the focus of this visit.
It's certainly signs of movement in India. PK, say hello to our guest host, Stephen Sheng.
Hi, Stephen.
Hi, PK. Just want to switch the focus a little bit from the cross-border politics to monetary policy and economics. Pretty much the IMF has the biggest cut in India's GDP growth compared to other countries in the region and across the world. And it looks like that the Reserve Bank of India's hands have been pretty tied since the beginning of this year. They've made one rate cut, and then inflation has been up. Crop prices were up in the past couple of months, and it looks like food inflation may actually come back to the region, especially in India. So what's your take on that? It looks like their hands are tied, but the economy is slowing down.
Yeah, I don't think that the RBI can cut rates just yet. The important thing is that inflation is still above 7%. It has come off quite a bit from a year ago, but is still too high to warrant an immediate rate cut. So what is much more important really is that the government has taken important steps in the past month to substantially reduce subsidies, particularly on fuel, and it has restarted its disinvestment program. As a result, the fiscal deficit will begin to moderate quite significantly over the next few months, and that will provide some room for maneuver within, I'd say, the next month or two for the RBI to begin to provide additional support. The real concern that the RBI has had for some time is that the fiscal deficit was spiraling out of control. That is what needed to be restrained. I think this government has taken significant steps in the past month to do that.
PK, the vexed question about foreign investment and this latest set of arguably very ambitious FDI reforms, if you look at multi-brand retailing, they do carry some fairly onerous conditions. Foreign retailers required to source 30% of their inventory of manufactured and processed products from small and medium-sized Indian industries. Is that going to be a stumbling block?
I don't think it'll be a major stumbling block. I think the fact that it's opening up the sector is attractive enough. 30% is not a very onerous target. I think India does need to tweak the definition of what a small-scale manufacturer is. I think that it's a very rigid condition, and it's not good for India. So this is something that probably needs to be addressed. But those are the sorts of minor issues that will be addressed, I think, over time. As far as the opening up is concerned, I think it's already very attractive for a lot of multi-brand retailers, and several are already talking about getting in. And of course, in terms of single-brand retail, IKEA is the big one that is about to get its plans off the ground.
Okay, PK, let's talk about what matters to most of our viewers, stocks. Valuations in India, how are they looking? Because Indian shares were actually doing pretty well even before the reforms were announced. Are they still fairly attractively priced?
I'd say they are somewhat attractive. They are very close to fair value. They're getting closer to fair value now. They've had a pretty strong rally, about 20% in dollar terms over the past 3 or 4 months. So they're not quite as attractive, of course, as they were before this rally began. And you've had both a rally in currency as well as the stock market. But given the fact that growth prospects are improving, given the fact that the economy was flat on its back until a few weeks ago, and is now beginning to have several pathways out of this period of weakness, I think the prospects for better economic growth and consequently better earnings growth justify current valuations.
So listen, we've been talking about opening up more to foreign investment. As far as stocks are concerned, so we've got a better story than we had maybe even just 3 months ago. Institutional investors can get in in a limited way. Foreign retail investors, though, still quite restricted, or what's going on?
Well, I mean, in the past, foreign retail investors were completely kept out of the market.
And now?
That has actually opened up over the past 8 or 9 months. In February this year, there were significant openings to retail investors. Okay. So, in fact, there are opportunities for retail investors to buy into Indian stocks
directly.
As well.
Good to know. Okay.
Okay. Thank you so much for joining us. That was PK Basu from Maybank Kim Eng.